Okay, good afternoon, everyone. Thank you so much for taking the time as always. And as always, we want you to walk away with nuggets after today's presentation that you can use in your daily practice. So, today's presentation is going to touch everyone, all different types of agents, advisors across the industry. Okay, it doesn't matter what side you're on because we have a little something for everyone. And the reason why, number one, we have at Levinson, we sat down and handpicked our top 10 trainings, webinars, podcasts throughout the year. And then what we also did is we said, okay, let's go through. We have over 90 carriers, over 1,000 products. Let's hand pick. Let's look at volume premium. Let's hand pick each product to see where the bullets were for 2022 and share all of that with our agents. So if you're on this live, great. If you're seeing this over the holiday weekend and next week, that's fine too. But we want you to write down notes and again, walk away with nuggets, which is the name of the game. So, what we're going to do at the end is we're going to have our question of the day. We're going to give away the new Fire 10 tablet. Even if you don't like the Fire 10 tablet, it's a great time to regift with the holidays around the corner. So, but it is awesome. I think you're going to love it and write a ton of e-apps and use the Levinson mobile app on the tablet, which you should be doing. It's a free download. So anyway, we're going to ask the question at the end. Make sure you're paying attention. Make sure you write down notes because whoever answers first and correctly will win. We'll announce your name right before 3 p.m. Eastern Time. Okay, so what we're going to do today is we have the Levinson part and then we have the Prudential version as well. That's the main presentation today. And without stealing any of their thunder, I'm going to talk about a few bullets with Prudential. We've been a direct IMO with them now for way over 10 years, and we have a great relationship. In fact, about 8 minutes before we started this call, okay, our VP just did us a big favor. Brett, who's on the call with us, literally helped us with underwriting on a certain case that's about $140,000 of target premium, right? And he literally just saved the case for us. So the name of the game with Prudential is underwriting, right? And they have the new platform, which is streamlined, no exam to 3 mil. And then if there's a tough, challenging case, okay, if it's height and weight, if it's tobacco users getting non-smoker rates, if it's maybe a challenging case where you need actual age instead of nearest, right? They also come into play and they typically will destroy the competition with these certain niches. So that's why I wanted you all to pay attention. That's why I wanted Prudential back in front of our agents because number one, their name, huge. Okay, their rating, awesome. Okay, they have an advanced case design department that is also amazing. Chuck runs that. He's speaking today as well. So, anyway, like I said, a little bit for everyone on today's presentation. And Prudential is back bigger and better than ever. So, very excited, as you can tell in my voice. Let's keep moving along. What I want to do first, real fast, is share this unbelievable testimonial that came in. In fact, it was over the weekend that it came in, and I saw it on Saturday morning, and I was blown away. I took a screenshot on my cell phone, and Scott and Scott, by the way, I see you're on the call with us. Thank you so much for sharing this. Okay, this was on our Facebook page, on Google reviews, and I just couldn't help but to take a second and number one, thank Scott. Number two, share with the team and just I don't know how to put it in words, but this means everything to us. This is our world. We work so hard every day. Okay, sometimes till 9, 10 p.m. at night during the week. We're literally sitting in our office. So when we get a review like this, okay, it more important than the dollars coming in, than premium, than cases, than conventions. This means everything, and I'll share real fast. Left-hand side. I want every agent and broker in America to know that Levinson is best in show within the IMO division. Not even a close second. Their webinars have a terrific pace and are always positive and upbeat. Better yet, take something away from them every time. Andrew Paris is my go-to. He's a pros pro, extremely knowledgeable, trustworthy, and consistent. The entire organization follows up and follows through. What more could anyone ask for in a partnership? Hop on one of Bill Levinson's webinars and see for yourself. You will be impressed. Scott, again, I mean, I'm speechless. That is everything to us, and thank you for taking the time and sharing. Right? Oh, I can't get enough of that. Right hand side, top corner, another one just came in from Jeff. Now, Jeff tried us out and said, you know what? I'll give them a few challenging cases that he couldn't get placed elsewhere. Well, guess what? Okay, not only did we quote them, got them approved place. Jeff was a winner in his client's eyes. Of course, a win-win, right, with the agent and consumer and us and the carrier. Real fast, great company, helped me with a couple of difficult cases and then showed me some products that will help me going forward to make my client's decision experience better. Okay, again, thank you so much, Jeff and Scott. By the way, if you want to share, we'd love to hear from you. Please, Facebook page, Google, whatever works better for you. Please take a minute, okay, and share your thoughts, good, bad, and different. We created this IMO on behalf of our agents with your feedback. Okay, we pivot based on our agents' feedback. So, very important stuff. Again, we want to hear from you. Let's keep moving along. What I wanted to do, and I have two slides left, and then I'm going to turn the wheel over to Brett and Chuck, who are also on for the main feature presentation. So, what we did here, and this is awesome, okay, because we have a lot. Okay, when you go into the Levinson and Associates website, it seems like hundreds of thousands of moving parts. You don't know where to start. And the reason why is we have to cater to all agents in all different parts of our industry. Okay, 17 years old, 92 years old, final expense agents. It could be estate planning agents that focus on the monster IUL and whole life cases, whatever it is, right? We have even CPAs that work with us as well. So we need to have the most competitive platforms, lead programs, products for everyone. So yes, it could be overwhelming, but what I wanted to do here was give you a 100-foot overview on what is hot for 2022 this year. Okay, obviously we're coming to the end, and then we're starting a new year, bigger and better than ever, just like Prudential. Okay, but real fast, left-hand side, these are awesome training webinars and podcasts that you need to listen to. Obviously, it's free. You can, in fact, click and listen through the mobile app or on YouTube or through our website, whatever works for you. We're going to have a few days off here with Thanksgiving, so now is the time to jump in. So top left corner, real fast, that is our Ringy CRM tool. I don't care what kind of agent you are. If you're in sales, period, you need to have a system like this that reaches out by text message, email, phone calls, keeps all of your prospects and clients organized. Okay, it is a 1-2 punch with Ringy. We did a part one, part two. In fact, within the last month, it is awesome. It's a game changer for, I don't care which agent it is, what your age is, what products you focus on. This will change the game, okay, especially for the new year. Middle section there, we are handpicked actually one of 4 IMOs to launch the latest instant decision IUL product that is blowing up right now by Lincoln Financial. If you're interested in that, let us know. Great webinar presentation. We were the first IMO out of the 4 to roll it out. Just under that, Joe Ross. We sat down with Joe Ross, and if you haven't heard of Joe Ross, he is my favorite life sales coach in the industry, bar none. Okay, we sat down and went over everything related to IUL. Okay, and it's a 1-hour version, and I promise you, if you never sold an IUL before or you're an IUL veteran in the space, you will walk away with a ton of nuggets. I promise you. So that one is well worth it. And then on the bottom, This was our keynote speaker at the Levinson Expo in 2022, Mary Reed. So I sat down with her for an hour and we went over the actual keynote presentation and how she works with agents, CPAs, estate planning attorneys to land the jumbo monster cases. She has 3 books out now. In fact, what we're going to do, today's winner will get the Fire 10 tablet and her latest book. Okay, and it talks all about leveraging tax advantages, retirement income. She picks her favorite products to work with, and she will actually work with you to land the large cases. She'll do all of the selling for you. In fact, once you make the introduction, you can be as involved as much or as little as you prefer and still get the bulk of the commission. So anyway, you've got to check this one out as well. Let's move over to the right-hand side. So top left corner is the CEO of Ringy. I sat down with him. It's the Ringy CRM tool. I sat down with him for an hour, and we talk about how this tool changes the way life insurance agents do business, period. Top right-hand side. This is a big financial planning group out of South Florida. Okay, they're also family friends of ours. And Jason, I've known since I was 10, 11 years old. We did a 1-hour interview. He talks about his firm and what they're doing to grow their business and challenging times during the pandemic. What products do they focus on? How are they generating leads? Anyway, that's a great 1-hour agent interview. And I think it's great for agents to hear other agents out there in the field, okay, because you're all the same, right, in the trenches trying to make it work. So anyway, that's a great version. Just under that, I sat down with Neandre, right, the social media influencer. That was another great interview. He also is our VP with LSW, so it's kind of like 2 hats in one. That was a very, very interesting interview. Let's move over to the right side. That is the new latest instant decision up to $2 million term product that is 100% client driven, no agent involvement. That means sell while you sleep. Okay, someone goes to your website, runs a quote, signs up, they can print their policy, get approved. You wake up in the morning, boom, commission plus renewals. That's our latest product launch with Hero, and that is underwritten by Assurity Life. So that's another hot spot blowing up in the past few weeks, especially with Bestow going away on the 30th of December. Just under that, I sat down with our latest VP and owner of, in my opinion, the best lead platform that is around, at least today. Okay, because we all know leads are very hot sometimes and they kind of fade off a little bit. Today, and I'm on record by saying this, I'm in the end of 2022, right? November, coming up to Thanksgiving. This lead program for $1 million life leads and FEX leads, you get to pick, is the hottest lead platform out today, period. Okay, the program works great. 8 out of 10 agents are coming back to buy more leads. You get a co-op discount if you're a Levinson agent. I sat down with him for 51 minutes to talk about how the leads are generated, how you can get started, target market, voice scripts, everything, all the above for you to jump in and start utilizing these leads to make sales. So another great 51-minute interview there as well. Okay, last slide here, and then Prue's going to take the wheel. So I always talk about this, and I think it's so important. We don't want to have the Burger King and McDonald's all on the same corner. Okay, yes, we have over 90 carriers, but we only have about 10 to 12 core companies where most of our business goes, where our relationships are awesome, where our Prudential VP can get a $140,000 case bumped up one health class to make it work so we can place it, right? And where the customer service is like it was back in 1987. Those are our core companies. Those are the go-tos. Prudential is one of them. As you can see, they are squared off in red with a yellow arrow. And the reason why we wanted to show you this chart is because these are our go-tos for IUL. Okay, our top IUL companies. And as you can see, Prudential, again, with the yellow arrow dead center. We've been with them a long time, unbelievable relationship. So definitely worth having Pru in your toolbox. Just the name and ratings alone. Okay, yes, there are other great companies and products, as you can see in front of you. The name and branding with Prudential, second to none. You need to take a look, get appointed. Okay, and I promise you they have something for everyone, and that's what we're talking about today. Let's keep moving forward. What I want to do now is introduce our regional VP, Mr. Brett Gerber. Brett, you there, buddy?
I'm here, Bill. I'm here.
Okay, I appreciate it.
Absolutely. First of all, I just want to say it's a lot of fun. It's a pleasure to work with Bill and Carrie and everybody at Levinson Associates. I'm in communication with them by phone, email, every day about cases or sales ideas or whatever it might be. And Bill, I love working with your company. It's a pleasure to work with you and for you. For all of you who don't know me, my name's Brett Gerber. I'm with Prudential. I've been with them for over 12 years. I'm based out of Atlanta, Georgia. That's a great thing sometimes, but I think it's kind of a bad thing right now to live in Georgia. I'm not sure what's worse is I have to watch political ad campaigns on TV for the next 2 weeks, or seeing the Atlanta Falcons lose in the Super Bowl replay over again against the Patriots. So it's kind of crazy here in Atlanta, Georgia, but say some prayers for me, and hopefully I can find something else on TV besides those political ads. But today, like Bill said, I'm going to give you a little background about Prudential. I'm going to talk about three things. I'm going to talk about number one, Prudential's value. Number two, our underwriting, and number three, some of our winning designs. And then I'll bring on Chuck Peralt, our advanced planner, and he's going to talk about mirrored loans. So number one, Prudential's value. Like Bill was saying, we're an amazing company. I've been wholesaling for about 25 plus years, and I worked for two other carriers that really didn't have the ratings that Prudential has or the backing. And it's a pleasure to work for Prudential. I mean, just off the top, he was talking about our ratings. We're A's across the board. We have 1.7 trillion in assets. We're a company that's going to be around for the next 30, 60, 100 plus years. We're always looking for the future, and we're always trying to make our products for the future. We're a very conservative company. We're not. Our products are very conservative. We're not the product of the month, product of the week. When we put a product out there, it's going to be there. It's competitive. It's 1, 2, or 3 across the board. Let's start with our term products. Very competitive. 1, 2, 3. We have a 10, a 20, and 30. But the great part about our term products, not only competitive, but also we can convert to any permanent product in the Prudential category. Permanent products are very competitive. You're talking about IUL. Take a look at Prudential against Lincoln. I heard you bring them up. Sometimes we knock the socks off them, sometimes we don't. But we have an IUL, UL that's very competitive. And then we're one of the only companies that still has a wide array of select products of survivorship, second to die for estate planning. So UL, IUL, second to die in term. Please take a look at us. Think of Prudential. Think of myself. We're an extra resource. We're employees that work for Levinson and Associates. You have myself. You have Jessica, who's my internal, that helps with everything from sales designs, case designs, running illustrations. We've worked together for over 9 years now. Just at Prudential, we have 10 case managers that work with Levinson and Associates. 10 case managers. We have 10 underwriters that work directly with Levinson and Associates. So, and then also I think now we have over 12 advanced planners that if you need to talk about any subject you need to in advanced planning, we can get you on the phone, or we can, get emails, whatever you want, get the information to you as soon as possible. So you got the case managers, underwriters, advanced planners, all there at Prudential working for you and Levinson and Associates. So underwriting, number two, I'm talking about underwriting. I'll go through these really briefly and I'll get to Chuck, but underwriting, I was I didn't know, like, when I was in fourth grade that's what I'm going to do for a living. I'm going to negotiate underwriting instead of playing baseball for a living. I love negotiating underwriting. Like Bill said, I got a case from a table B to a standard literally about 30 minutes ago, and hopefully we can, that's just one thing we can do. If there's a case that you have where, we can't get the financials right away, maybe we can work with that. Whatever it is, when you have a case informally, if there's some kind of issue or something we need to work through, give Bill a call, give Kerry a call, give somebody at Levinson Associates, and get me on the phone, and let's try to take care of that, because you've already done the hard part. You've already sat down with the client. You've already got the formal application. You've already sold them the life insurance. Let's make it an easy, smooth process. So if you ever need help, please give Levinson Associates a call, and I'll help out any way possible. So number one, Bill hit on actual age and underwriting. That's a huge, huge, huge bonus. For example, you're showing age 49, somebody else is selling, some other agent's showing age 50. That could be a difference between $1,000 and $10,000 a year annual premium. Let's talk about approved fast track, getting a policy as soon as possible. All right. So this program, approved fast track, if you have somebody between the ages of 18 and 60, we can get you a policy probably within 8 days, 10 days. Okay. Between age 18 and 60, death benefit between $100,000 and $3 million of death benefit. If you have somebody healthy, all right, we can, somewhere between standard to preferred best, we can get you a policy ASAP, no exams or labs. Okay, how this works, it goes, I'm not going to get into the operations of it. You go in, you put the information in. Let's just say you want $3 million of life insurance. All right, goes in, the person's healthy, you get it. We'll issue a policy. You'll have it right away. You're good to go. All right. Let's take another example. $3 million of life insurance. It goes through the system, all the information, the background about the person. Prudential might come back and say, you know what? We can do $2 million right now, but in order to get another $1 million for a total of $3 million, we're going to need an APS. So that'd be up to the insured, and they can answer that question. So that's called our approved fast track. We can get to a policy as soon as possible, up to $3 million and up to age 60. One of the biggest categories we have that sticks out is non-smokers. Okay, so if you have cigar smokers, dippers, chewers, any type of tobacco, we can get you a non-smoker rating. Marijuana is the big thing over the past 5 years. If you have somebody that smokes marijuana or vapes marijuana, we need to make sure that they admit it on the application. They tell the examiner we can get them non-smoker rates for marijuana. As long as they don't use it more than 3 times a week, we can get non-smoker plus, which is our third best category. Again, they need to admit it, put it on the application, make sure they tell the examiner, tell their doctor, less than 3 times a week, we can get them non-smoker plus. All right, negotiating underwriting, I already talked about that. Bill was talking about larger cases. If you do have large cases, we can please give Bill a call or Levinson Associates a call. Get us on the phone. Would love to talk to you about it. I'll get you on the phone with an underwriter, president, or an officer, and we'll walk through this case. We can get up to $65 million of death benefit on one person at Prudential without going out to reinsurance. Okay, we can auto issue $65 million. If you need more than $65 million, we will have to go out into the market, and we can do up to $132 million if you do have those larger cases. Again, $65 million, we could auto issue that ASAP and go through underwriting. All right, enough of underwriting. Number 3, winning designs. People are always asking me every year, every day, over the past 3 years, during COVID and 2022, what's selling, what's working, what's moving out there. And I'll be honest with you, besides doing the job that you do every day, doing the discovery with your clients, finding out exactly what they need, sitting down, finding out what they need, the 3 things that are selling at Prudential that have been in my business, it's back to the basics. Number 1, it's been estate planning. You have people liquidating businesses, selling houses, whatever it might be, timberland, whatever it might be. They are liquidating and they're preparing for the future. They're buying second to die policies and they're getting ready and they're doing the estate tax planning because they're not sure what's going on in the future. And that's the number one idea is estate planning. Number two is wealth transfers. People, I believe personally, wealth transfers, people are doing this more often now because COVID went through and they found out, hey, you know what? I love these grandkids. I love this charity. I'm going to give some of that money and I'm going to put it inside a life insurance policy and I'm going to do a wealth transfer. So those two things. And then number three, over the past, I believe it's 8 years now, we've been offering a mirrored loan program. We've done millions and millions of target premium with this mirrored loan strategy. It's one of our best. And today, my friend Chuck Peralt, who I've worked with forever in advanced planning, he's going to talk to you about mirrored loans. And Chuck, I'm going to let you take it away. And everybody have a great day and looking for questions afterwards. Thank you.
Thank you.
Great. Thanks, Brett. Thanks, everyone, for joining us here this afternoon. I hope that you'll go from here and take away another new idea in addition to everything you've already heard that we can ultimately use to generate some business. As Brett mentioned, our most successful idea really over the past 10 years or so is pretty easily this mirrored loan idea. But where do these cases come from? Well, we know you're all very regularly reviewing your clients' policies for a lot of reasons, right? All the ones you see here on the screen. But what is one thing that has consistently been a theme as we've been out there traveling the country and talking to a lot of different advisors that we work with is loans on a policy is an area where we know advisors often are not comfortable. If I was in front of you all in person, I'd ask everybody to raise their hand if they had ever come across a loan on a policy, and I would imagine all your hands would go up. And I'd ask you to keep your hand raised if you knew everything you could and couldn't do when there was a loan on that policy, and typically every hand then goes down, which tells us that this is an area of opportunity because you've all come across these cases, but this is not an area that we feel very comfortable addressing. And this has been the case no matter where in the country we go, no matter how experienced or successful the agents are that we work with. No one feels comfortable with these cases. So hopefully today we'll get you to a place where through the three things we're going to talk about, you recognize the opportunity that is available to us. So first and foremost, we're going to talk a little bit about how we got here. Why are there so many policies with loans, and what is the concern with those policies? We're then going to spend most of our time talking about two unique case studies, and finally we're going to wrap up by talking about the Prudential Advantage. Why Pru? Why Pru? Because we do a ton of these cases. Brett talked about this at the top, but we've done roughly 2,300 of these cases over the past 8 years for about $500 million of 1035 exchange. So we love this idea because we know it's one that's incredibly successful. So how did we get here? Well, let's start by talking about how we come to have so many loans on these policies. Well, there's two ways really a loan can happen to a policy. The first is probably the obvious one. As you've been out there having conversations with your clients and you ever sold them a permanent policy, you probably at some point in that conversation told them they could access the money in that policy if they ever needed it. Well, some of them needed it, and that's one way a loan can end up on a policy. Now, I would suggest that that happens with equal frequency on any policy type. That's not a feature of a whole life policy or VUL or IUL or whatever. If they needed money, they don't care what type of policy they have, they took the money. The second way, though, is something that's unique to whole life. On a whole life contract, if the premium is not paid, then the premium is generally set up to automatically loan out of that contract. So it would stand to reason that there's probably more loans on whole life than any other type of contract because of this. Now, for those of you who may not sell whole life or may not work with it or even be all that familiar with it, it might help to set the stage here. Because while you might not work with whole life, there's certainly a lot of people out there who do. As recently as 15 years ago, the sales were down quite a bit to their trough, but that still meant they represent about a quarter of all sales. And if we were to look at even the more recent years, we can see it's closer to 40% of all of the life insurance premium dollars. Here's the problem. No matter which company we look at, the dividend story is exactly the same. The dividend story is that we started a bunch of years ago at a much higher number than we find ourselves here today. The problem is how many of these cases were sold to the clients. The problem is that many of these cases were sold to the clients in such a way that they were told all they had to do was pay their premium for a limited number of years, beyond which the policy would be able to pay for itself. And as that dividend came down, that statement became a bit less true. As that dividend came down, the 12 or 15 years that the client was supposed to pay maybe became 20 or 25. But that client didn't adjust their plan, right? The client just heard, I'm going to pay 10 premiums, and they never listened to another thing that had to happen. But we can see today that it's obviously a very different story, because when that policy underperformed, those premiums were still missed by the client. They didn't adjust their plan in time, and all of a sudden those premiums started loaning themselves out of the contract. And if that only happened once, it wouldn't be a big deal, right? If this happened one time, the client figured out what the problem was, and they changed their plan, then we wouldn't be here having this conversation. But most of the time they don't, right? The clients don't understand what they're looking at. They don't review their coverage anywhere near as often as they should. So we're in a situation where we look years and years down the road, and all of a sudden there's pretty big loans against these contracts. There's pretty big loans against these contracts. And if they want to keep these contracts in force, they're going to have to pay a lot more, because they both missed a lot of premiums and also accrued a significant amount of loan interest. It's very common to see an 8% loan interest rate on some of these old contracts. A lot of clients get to the point where they say, you know what, I recognize the problem here. My policy is not going to stay in force, but I'm old. I don't need this coverage anymore. I got past my working years. I'll just surrender it. The problem is, if you surrender a contract with a loan on it, that loan is taxable to the extent of the gain in the contract. And there's often a ton of gain in these old contracts. So while surrendering that policy might sound like a good option, what it often represents to a lot of these clients is they're going to have to pay a significant amount in taxes. So we call that phantom income. They're going to get a big tax bill, but they're not going to actually get any money. So what do we do about it? We look at these three options for every single case, which is the client can either do nothing, right? They of course don't have to address this, but that might mean their policy will lapse and they'll owe taxes. They could make some changes to their existing contract, or they could do what we do. They could do a 1035 exchange to the new contract and bring the loan over as part of the exchange and find some better way to deal with it than they had before. You might look at that and say, well, why would they do that, right? How does that help? They just have the same loan before as they do after. So how are they in a better position? Well, they're in a better position because now they have a plan. They recognize the problem, and they've done a 1035 exchange to a new policy where the sole purpose of this exchange is to put them in a better position and to deal with this loan. It would stand to reason that if the sole purpose of this design was to deal with this loan and the other policy never considered the loan at all, they should have at least some chance of doing a better job. So what does that look like? Well, let's talk about that in the vein of two cases. Let's start by talking about one case that's not that loaned out. The first case is a guy that was a financial advisor. He actually made his income primarily from managing his clients' assets and charging them a fee each year. When 2008 happened, his income went down, so his desire to pay his life insurance premium went down as well. When the economy recovered, his desire to pay that life insurance premium did not recover, even though his income had gone back up. So when he came to us, he sat through a very early version of this presentation. He said, I have a couple goals. I don't want to pay anything anymore. I'd like you to get me as much death benefit as I possibly can. And I want to be in a situation where I don't have to deal with this loan down the road. Because if he looked at what was happening with his current policy, here's what he saw. If he did nothing, that loan would continue to accrue interest, and it would do so at 8%. It's very common to see an 8% loan interest rate on some of these old contracts. He could have put some money towards his existing contract, but he told us he didn't want to spend any money. So that's not a real option for him either. So what we did is what you'll see next, which is do a 1035 exchange from his old contract to the new one. So let's talk about what he had and what we did. What he had was about $375,000, of which $80,000 was loaned out. So at first glance, that's not in bad shape. It's a little less than a quarter of the value is loaned out. And whenever I'm starting with one of these cases, the percentage that is loaned out is a pretty big indicator of what our options are going to look like. He also had $175,000 of cost basis, which is really important, as you'll see here in just a moment. So what did we do? Well, we did a 1035 exchange where we did a couple of things that he appreciated. First, we were able to increase his death benefit by about $250,000, and we were able to do so without him ever paying another dollar of premium. If I told you nothing else, you'd probably have a client who'd be willing to listen. But what about the loan, right? The loan was the whole purpose of this conversation. So what happened to that loan? Well, what you'll see in this second bullet is it says in this specific case, the loan was able to be repaid entirely by withdrawing a portion of the cost basis in the second year and utilizing those funds as a loan repayment. So let me say that in a little bit more plain English. When we did the 1035 exchange of the new contract, we still had most of that surrender value available. So in the second policy year on that new contract, could we perhaps take a withdrawal equal to the amount of the loan of $80,000? We can. If we take that withdrawal, do we owe anybody any taxes? We don't, because our cost basis comes out first. Remember, that's Life Insurance 101. And what can we do once we have that money? Well, we can actually do anything we want, right? It was simply a return of their cost basis. That could be money in the bank. He could go buy a Corvette. He could put his down payment on his vacation home, or he could use it to repay the loan on the contract. And what happens is at the end of this withdrawal, he ends up with a new contract with a fully paid up death benefit, and he never paid another dollar to do it. He never paid another dollar, and that loan that existed before is also gone as well. All he did was use that cost basis in a creative way, and through doing so, he's able to get rid of the loan on this contract. So while this bullet says in this specific case, what I would tell you is really in any case where the loan is less than about half of the value, this is the approach that most people ask us to do because it's a pretty good value prop for the clients. You can get rid of a loan that you may not have even really felt like you took because all you did was not pay your premiums like you thought you could. You can get rid of this loan that you really didn't feel like you took, and you can get a much higher death benefit without ever paying another dollar. It's not going to be the hardest conversation you'll ever have to have with a client. So let's talk about this second guy. Second guy is Larry. Larry did everything wrong. Larry had a policy he took out 19 years ago, and he stopped paying the premiums way too early. Now, he did so because he had a business that wasn't doing very well. So it's understandable how he got in this situation. But he also took additional loans because that business wasn't doing well and he needed the money. So here's where Larry ended up. Larry ended up with a little over $300,000 of cash value, of which $299,000 was loaned out, almost all of it. But this current situation represents a pretty big problem because he only has $60,000 of cost basis, and the gain in this contract is the difference between this $317,000 of gross cash value that you see right here and this 60,000 of cost basis that you see down there. So if his policy were to lapse, he's going to owe a huge amount of taxable gain. And when your contract is 299 lapsed out of 299 loaned out of 317,000, it is almost certainly going to lapse. And there's a bunch of problems here, right? Every carrier that you work with is going to have some minimum requirements in terms of the amount of loan they can take. And a contract that's 299 out of 317 is too loaned out for everybody, by the way, including us. There's literally not enough money left in this contract to put a new contract in force. We'll get into what Prudential's rules are here in a few slides, but importantly with this case is the only way that this client is going to be able to address this is he's going to have to pay back some of the loan prior to the exchange to get it to a point where we could deal with it. Now you might think, well, Chuck, well, what if he doesn't want to do that? Well, let's go back to those three options. By the way, this is the third time you're seeing these three options in this presentation. You see it on every marketing piece that we have because we truly believe this is the best way to explain this to the client. If his policy lapses, he was going to get a taxable gain of roughly $250,000. Taxable gains from life insurance are taxed as ordinary income. So if he was in a situation where this policy lapsed, he would get nothing. He'd get a tax gain of $250,000. And it depends on what state he's in exactly how much he'd owe. But if he's in a state up here in the Northeast where he also has state tax on top of the federal, he's paying north of $100,000 in taxes. So while option one says do nothing, what it really should say is pay $100,000 in taxes and don't have any more life insurance coverage. When you put it that way, it's going to sound a lot less appealing to a client. They do need to hear it though. They need to understand that this is what happens if they continue to ignore this problem. Otherwise, they might just. So you might say, well, Chuck, if that's what happens if the policy lapses, what can we do to make the policy not lapse? It's a great question. Easy enough to find out. We just call the existing carrier, we get an in-force ledger, and that'll tell us. In this case, the in-force ledger told us it'd be about $30,000 a year. So if I only gave you those two options, which would you pick? Because $30,000 a year is an awful lot of money, but paying $100,000 in taxes and not getting anything is too. $30,000 a year at least gets you coverage, but 3 years in, you've paid about as much into the policy as you would have paid in taxes and you still owe. So you might feel like you're in a situation where you're a bit damned if you do and damned if you don't. So while those are two options, let's consider what the third one might be. The third option is to move it over to us. As I said earlier, we do need them to pay back some of that loan prior to the exchange because it's too loaned out. So we need $20,000 up front. And you might be sitting here thinking, well, Chuck, what if they don't have 20? Well, guys, what if they don't? His tax bill's 100, his other policy is going to require 30. He's going to need to come up with one of these options, right? There is no scenario here where this gentleman is not writing a check because he's either picking the taxes or one of these two policies or declaring bankruptcy. And I don't mean to be that dire, but that's literally the situation that this guy is in. So while it might be a lot of money up front, in the context of where he is, it might also be the least expensive option, as it is in this case. Now, once we bring it over, we did need him to pay the interest, right? We asked him to pay the interest out of pocket. The interest was about $5,600 a year. So all in, he pays the interest for 5 years. He spends a little under $50,000, and he's able to get a contract that runs until his age 120. The best way to get rid of a loan on some of these more highly loaned contracts is to be in a situation where your client dies with that loan. In fact, it might be the only real answer that the client has. So what does that death benefit look like? Well, initially, it's not a big number, and it goes down because we accrue that loan interest. But consider that he is only putting in about $50,000, and at age 90, his heirs will still get somewhere around $70,000. In this scenario, it might not sound like the greatest rate of return that you've ever heard. However, his first option was to write a $100,000 check to the government, and his heirs would get nothing, and his other contract would have required hundreds of thousands of more dollars going into it to get anything out of it. So while putting in $50,000 to get out 70, doesn't initially sound attractive, if you compare it to the other options he has, it represents by far the least expensive way for him to get out of the mess that he's found himself in. One other great part about our contracts is that the loan interest is entirely guaranteed. So you're in a situation where you know day one exactly what that loan interest will look like and exactly the amount that the client is going to owe going forward to keep that loan steady. So why Pru? What's different about Prudential, and what are our rules, and what does it take for us to look at a case? Well, first, we only really have one rule. That one rule is you need at least $25,000 in the contract that's not loaned out. And you might say, why did you say at least? I said at least because in some cases you will need more. If you have a $10 million exchange, and we have seen them, and there's only $25,000 that's not loaned out, he's going to need to pay even more back because we're going to need even more than $25,000. $25,000 out of 10 million is just not a meaningful number. So as the cases get bigger, it realistically becomes a question of how much, it becomes a question of how much of the policy is loaned out, and that ends up being about 90% at the maximum that we could take. So on the smaller cases, it's $25,000 of minimum. As the cases get more loaned out, it's more like 90% or so is the max loan that we could take. But hopefully, as you saw in this last example, even on these cases that are incredibly highly loaned, you came to understand a bit about how we can position it and show the client why it still might make sense to pay some of that loan back and look at it as an opportunity. Every case requires a corporate exception, which sometimes people see and it scares them a little bit. What that really means for all of you is don't try this at home. What it really means for all of you is let us run these ledgers. Work with your partners here at Levinson. They'll work with us on these cases, and we'll get you the right ledger that makes sense. Some folks like to try to run these on their own, and I can understand why they'd be inclined to give it a try if that's what they're used to doing. However, in those situations, you'll find that it doesn't always work quite as easily as you expect. So we just have this exception process in place to make sure we've seen every single case. If you work with us, you'll find that you'll never have an issue getting this exception. Last but not least, the coverage does require full underwriting here. There's nothing different or unique about the underwriting process for this case versus any other case, but it is a question we get very often, so it's probably worth pointing out in this presentation. Perhaps the most important thing we can bring to you, though, is our expertise. For most of you, the next time you work on one of these loaned out cases will be the first time you work on one of these loaned out cases. It's not our first rodeo. We have worked on several thousand of these cases, and those are just the ones that actually went paid and became applications. I've probably run somewhere north of 100,000 illustrations with loans on them at this point because it's been the majority of my time for close to a decade. There is nothing we haven't seen before. So while it might be your first time working on one of these cases, it definitely isn't not ours, and we're happy to lend you as much or as little of that experience as you'll find beneficial in leading up to your conversation with the client. We can do this on every one of our products. As you might expect, some products will work better than others, but we do not have any product restrictions. So if you have a specific goal, we'll do our best to accomplish it with the product that you'd like. And if there's a reason why that doesn't work or there's a better product available, we'll show you how that works too. And again, there's no strict loan to value percentage limitation. If we're in a situation where it meets our minimums and has enough to put the policy in force, we can do it. Last but not least reason to work with Pru, Life Insight. Life Insight is our proprietary in-force policy management tool. And what this will help you do is manage these policies going forward in an interactive way to ensure that this problem doesn't pop back up for the client in the future. So I don't want to dig too deep into it here other than to give you this preview, but Life Insight's a really revolutionary way to help monitor these policies. And I think your clients will appreciate that level of interaction, especially after they've found themselves in a situation where their policy was in rough shape because it wasn't being paid attention to. So in summary, we talked about three things here today. We talked a bit about how clients found themselves in this situation. We talked about two unique case studies, and we talked about why Pru. So I'm going to skip here to our call to action because I want to be respectful of everyone's time. What we always ask people is this. When I have people raise their hands at the beginning of these presentations and ask them if they've ever come across a case with a loan on it, everybody's hand goes up. And I ask them to keep that hand up if they've felt comfortable working on these cases, and they never stand up. So what this tells us is you've all come across these cases, but you've not felt comfortable working on them, which means these are clients you already have. These are people that you already work with. And these are cases you don't have to prospect for. The clients and the opportunities already exist in your book. So all we ask as this call to action is simply review those client opportunities that you already have. If you're one of those people that would have raised your hand to that first question, but not necessarily found an opportunity for that second question, talk to us. Talk to Bill, talk to his team. They'll work with us. We'll put together something for you. And hopefully we can turn these cases that you didn't really think were opportunities into what might be some of the biggest cases many of the agents we work with will ever do. So Bill, I'm going to stop here with my formal remarks. I'm going to turn it back over to you to wrap us up.
Thank you very much, Chuck. That was perfect. What we're going to do, we're a little short on time. We're going to try to end in 5 to 6, 7 minutes here. So we're going to send out a thank you email, like I said earlier, and we'll include a lot of these brochures, marketing material that Chuck and Brett discussed. So if you have any other questions, please reach out to our marketing department. And of course, we could circle Brett or Chuck back into the conversation. No problem at all. As long as you are active with Levinson and you are 100%, then we have no problem jumping in and getting everything answered for you. Okay, let's keep moving along here. Again, great work, guys, and we appreciate the time. So to get started and to make sure that you are active and 100% with Levinson, we have a Get Started page here. We'll include in the thank you email. It's also on our homepage of the Levinson & Associates website. So just look at the yellow arrow, left-hand side, My Contracting, and then everything is on the bottom. Now, if you have an existing Pru appointment, use our leads for contracting or cash for contracting incentive. With your first paid app, you get free leads or cash if you move that contract over from another IMO. Very simple. Just fill out the little coupon online and you are in with your first paid application. On the right-hand side is our IUL experience. So that's like a little microsite. That's part of our main website. And everything IUL is located here, including Prudential and the brochures and sales strategies. So again, all at your fingertips, very simple. Let's keep moving along here real fast, and I'm going to speed through this a lot. So again, if you have any questions, of course, reach out to any one of our marketers after the call. What I wanted to do here was just show everybody what is hot for this year, right? And we're going to start on the top left side. Obviously, we love Prudential. They're one of our core companies. Right now, besides Prudential, I want to dive into the hottest IUL of the year for Levinson, and that's Allianz. Okay, top left corner. Those are a few of the bullets and reasons why they are on fire right now. They have one product and they do very well in the IUL space. Okay, and that's why we put them as our number one go-to. Just under that, Lafayette Life. When we're talking about whole life, Lafayette has some great products. Of course, living benefit riders, built-in long-term care features. Dividends are strong. A+ rated company, Sage approved, Your Family Bank approved. That's a great sales strategy. Now let's move one over. Top section is American National. When we're talking about GUL, Anico is our go-to. Living benefits, no exam to $1 million. ROP rider included. That's a big one, and scholarship approved. Just under American National, when we talk hybrids, right? The new kind of life insurance that pays while you're alive. So they have an awesome LTC life insurance hybrid product. I'm sure you heard about it by now. This has been our go-to for hybrids this year. Let's move one over. Top Foresters Financial. So one over from the right-hand side, top row, Foresters for final expense and impaired risk term. They are our go-to as far as premium this year. Okay, they have been huge for us. That term product for anyone impaired risk has been awesome. Very liberal height and weight chart, as well as non-tobacco rates for tobacco users. Let's move just below that. So return of premium term became a very niche product the last couple of years. Kansas City Life is soaring. Most of our ROP term premium goes to KCL. In fact, we just had a nice case this morning come in. It works awesome. It's basically there's two ways to structure this. Okay, they have a triple play option that we can talk about on the ROP term, and then they have a new longevity product that is like term to 80 or 85 and all scholarship approved. Top right hand corner is our new instant decision term life, 100% direct to consumer, meaning you do nothing as the agent, still agent of record, full commissions, full renewals. This has replaced Bestow officially and will be added to Insure Me Now Direct in the next few weeks. Just under that is our go-to for term, GUL, and IUL. As far as premium incoming for 2022, Protective and Pac Life have been soaring and especially for term and GUL. So another great option there. Again, we're going to send out all of this info after today's call. Last but not least, our annuity department. We're going to talk about the two hottest products of the year for us. The top is the MIGA section, and Guarantee Income Life Insurance Company is the hot spot right now. They are paying 5.6% for 5 years with a 5% free withdrawal. They are on fire recently. And then Equitrust for FIA indexed annuities. Equitrust has been the leader for us as far as annuity premium. So call our annuity department with any questions and we will get you up to speed. And then also the MIGA Monday newsletter. We now launch out every single Monday with the latest and greatest rates. It's also on our website or just on any of our email signatures. You'll see it'll say MIGA Monday. You click and everything is updated real-time fashion. All right, let's keep moving along. I'm going to go fast because I know I'm late. Insure Me Now Direct update. So real fast, as you know, we are adding Hero, the latest term, to $2 million. And again, all the Insure Me Now products, you are agent of record, full comp plus renewals on some products. And this works great if you can team up or network with a P&C agency, a health agency, banks, financial institutions, associations. We can customize your site for them with their picture, their logo. Everything's sold. You get paid full commission. That's a little testimonial on the right side of the graphic. We'll include all of this in the thank you email. Okay, our Levinson Agent Expo April 21 for 2023. So coming up around the corner, make sure you're registered. This is free for all active agents. And then starting at $25,000, you get one free night at our beachfront location right on the sand. And then at $50,000, round trip airfare plus one free night. And this is all life and annuity premium. So it all counts. Make sure you qualify now. Okay. We have lunch, breakfast, dinner the night before. It's going to be a big day and a great day for you to walk away with sales ideas and strategies, right? To change your year for the better. Okay, what's new at Levinson? So I went over pretty much everything on here. We're going to skip over and include in our thank you email so you can take a look at your convenience. The Advanced Marketing Resource Center. This is another microsite that we built for you, okay? When the conversation, the prospect is a little outside the life insurance norm, right? Maybe they're selling a policy, maybe it's premium finance, maybe they're looking at rollovers or retirement income solutions, tax saving strategies, whatever it is. This is a site built for the advanced case design department. And Josh Hoffman is very, very good. He can help you with a lot of these new concepts. And then we can, of course, pull in some outsiders as well if needed. Okay, this is another hot button, the latest mailer program for this is life and annuity. We now have two different annuity mailers. We're seeing about a 2% return, and then life insurance as well. So those are the prices with postage, with printing, everything included, co-op discount starting at $525 for 1,000 mailers. The return address is your home, your name. So you don't have to depend on any third parties. Okay, that I hope they send me the leads when they send back the mail or call in. Everything goes back to you 100%. This is the last podcast that we recorded, number 42, with the Hero Life VPs. I dive in for an hour and we speak all about the new product, where it fits, where it doesn't, some great sales ideas so you can sell online, become your own Amazon for life insurance, folks. What's cool about the new product? It's 100% convertible to a whole life with a surety. So this has all the bells and whistles, but it's instant approved. So again, you're looking at the whole process about 6-7 minutes and an instant decision. Okay, in about 10 to 20 seconds. Everything happens 1, 2, 3. Future training webinars, which is what you're on right now. Let's focus on the bottom blue section. Mass Mutual relaunch. Speaking of whole life, they also have a new underwriting program that we're going to talk about that is rolling out on the 1st, so December 1, 3 p.m. Eastern Time. And then the bottom section there, we're talking all about long-term care and the latest hybrids. Another webinar you don't want to miss on the 8th, which is the following week. Our last slide here and our question of the day. I know I'm 5 minutes late. Hopefully you walk away with the new Fire 10 tablet and our Mary Reed rollover sales strategy, tax saving strategy, prospecting book. Okay, we're going to start with our Positive Tuesday quote, left-hand side. Dreaming without a plan is just an illusion, folks. Have your plan, map it out. How are you going to get started with some of these ideas? How are you going to use the latest lead programs, the CRM tool, the new Ringy program, right? Lay it out, take notes, draw out your think tank, your map, and make it happen. Now is the time, right? Get it out of your head onto paper and get your foot on the gas, and let's get moving along here, folks. Okay, question of the day. I spoke about our expo for 2023. You tell me the date and you win. That's simple. You tell me the date of the Levinson Expo upcoming and you win the Fire 10 tablet, Mary Reed's latest prospecting book on us. Whoever answers first and correctly wins. We're going to announce your name right now. So get your little fingers on the keyboard. Andrew's going to tell us who the winner of the day is. Andrew?
Yep. First answer is Jeff L. Jeff L.
Jeff L. Congrats. April 21, 2023. Jeff L. Congratulations. Let's all have a great weekend, great rest of the week, great Thanksgiving, right? You have plenty of training material to review over these next couple weeks, okay? And we want you to come out swinging come January 1st, 2023. Make it your best year ever, leveraging all of Levinson's great platforms. Okay, we're not just another Me Too IMO, and it's up to you to jump in and check out our tools. We're here to help every step of the way. Thank you to every agent out there. That's what we're thankful for this Thanksgiving. Thank you to each and every one of you. Again, let's have a great holiday and take care, and thanks again.